Alright everyone, Cowboy Trades here, welcome back to the channel for another update on the equity market. So as we discussed in our previous videos yesterday, obviously the SP 500 E-mini futures have come up on the 4-hour time frame to this line of resistance, and we have started to get continuation back down to the downside. On the daily time frame, your equity market futures are breaking back down. Bitcoin, however, is having a slight divergence. We will talk about this very momentarily in just one second, but let's head over to the bonds and the yield curve because we are seeing the leading indicators for the markets telling us, obviously, your equity market's heading down. We're also seeing the bond markets heading back up and the yield curve heading back down, which is what I want to talk about today. So when we do come over to the US government bonds, the 2-year yield, we've had further continuation back up to the 786 Fibonacci in our most recent video since yesterday. Now, we are getting further continuation. You can see in the past 4 hours or so, we've touched this and we've started to head back down a bit. A little bit of a healthy retrace, but the US government bonds 2-year yield is obviously heading up and getting lots of nice continuation back up to the upside. Obviously I still think we're going to continue heading up to this 1.236 Fibonacci up here, a further 10.5% increase to the upside. Now, why this is obviously important is, while we're sitting at this rate of 4.6%, if you're holding, cash government bonds and you're getting this return on, very, very safe investments, of course, this is not going to be a reason to hold stocks, especially when the equity markets are having, a worse than expected earnings season. So, obviously, as we talked about many times on the channel, when you see the US 2-year yield, which is a very, risk-off investment, when you're seeing this climb up in profitability up to 4.6%, it's no wonder why you're seeing the equity market starting to head back down. And while we are seeing, like we discussed at the start of the video, while you are seeing on the daily time frame, 4-hour time frame, lower time frames, the equity markets look like they're topping out and starting to head back down, we're seeing the US government bond 2-year yield get continuation. Now, the 2-year today is heavily outperforming the 10-year yield. Well, obviously in the past few days, what I meant to say is the US 2-year has been outperforming the 10-year. So what we've actually seen since our video yesterday is once again we've got another lower low in the US 10-2, also known as the US government bond yield curve. So with this is very, very linear and easy to understand. I've made an educational video if you want some more fundamentals about the US 10-10, also known as the yield curve. But basically, when the yield curve goes to the downside and the short-term yields become more profitable, you don't have to hold yields for too long to get a profitable return. And obviously, if the equity markets are looking shaky and you're getting a good return on government bonds, then it's no wonder yield curve comes down, profitability of government bonds goes up, especially short-term government bonds, and you see the SP 500 continue to go to the downside with the yield curve. Now, we've talked a lot about the VIX quite recently on the channel, but I've just drawn a new trend line which has been in play for the past 5 years. So we've just drawn this on the channel. Of course, quite recently we've lost this trend line which has been in place since June of 2021, and I zoomed out and was looking at, hey, where else can we bounce from? And it looks like we're coming down to a huge trend line which has been in play for the past 5 years, since the 3rd of July 2017. So keep your eyes on around about 17% for the VIX. It does look like we came down to this very strongly the other day, and we are getting a very sharp bounce back up. We're heading down to the 786 Fibonacci right now at 18.11. So all in all, with the VIX at 5-year support, and if you didn't know, if you're new to the channel, warm welcome. The VIX trades inverse to the S&P 500. So and it also, of course, trades inverse to Bitcoin. When you see huge spikes in volatility, this marks lows in the equity markets. When you see lows in volatility, and so far every single time we've come down and formed lows for the equity markets, these are normally marked by local tops in the equity market. So, for example, local tops in the equity markets, or just tops in general. So for example, top over bottom in the VIX here, this was a top over here. You can see, this was a short-term top over here. This was, definitely a longer-term top over here. This was a longer-term top over here. And quite recently, we've come back down to this level, and I do think that we should be expecting a further move back down to the downside for the equity market. So looking at the 10-2, once again, Government bonds are really exploding in profitability right now. We're getting continuation in the 2-year, we're getting continuation in the 10-year. Government bonds are exploding out of these bullish patterns with price targets. The 2-year yield has a 10.5% increase underway. It looks like the 10-year yield has a 20.6% increase underway. And while we are seeing Bitcoin having a slight push up, about a 3% increase, looking like we're invalidating a daily bear flag pattern, like we discussed on the channel, in the higher time frames, we're still looking and waiting to see how Bitcoin responds to 21,500. And if we are looking at Bitcoin on the daily time frame, it's still looking like this is going to be playing out as a beautiful bar pattern. I'll let you know if I'm looking to enter any trades on this. Currently, I'm sitting on the sidelines eyeing up a Solana trade like we talked about in my most recent video. I'd love to see this come up to $24 before I do short. And I am still in a profitable KDA short right now. If Bitcoin pumps up any further, I will be looking at new shorts for the markets. And if we do wrap up the video, coming back over to our Bitcoin chart, just once again letting you know in the higher time frames, if we do pull up our oscillators, a lot of these oscillators are just completely overextended right now. Weekly time frame, stochastic is heading down, squeeze momentum indicator is in light green. We've got a lot of room to move back down to the downside. And in terms of your MFI, we are sitting, right on this macro resistance right now. If I thicken this up, you can definitely see, we are at a huge overextension level in terms of liquidity. So that's all I've got. I've done a lot of Bitcoin analysis in the past few days. Honestly, my thoughts really haven't changed, but I did want to share with you. I did just record a video regarding the insider transaction ratio, and I also just wanted to give you a quick update on the yield curve breaking back down into new lows, and of course, government bonds breaking up out of support, getting further continuation, and the VIX heading down and bouncing from 5-year support. It's looking like we're seeing everything we need for an equity market top. If you want more information about why I think the equity market's about to top or has already topped out, check out the video which I will be posting after this regarding the insider transaction ratio, basically corporate insiders selling at the highest level in the past 5 years. But for today, my friends, that's all I've got. If you enjoy the content, as always, let me know down below by leaving a like and a comment, share the videos with your friends, and if you do want more of my posts, charts, memes, economic data, be sure to head over to my Twitter at 618_cowboy. Come and join the Discord, come and join the community. If you head over to my YouTube, click on the About section, you can see all of my official links for Twitter, Discord, Instagram, and the merch store are down below. But for today, my friends, that's all I've got. As always, it's been your boy Cowboy Trades. I'm out. Peace.